What's up, everybody? Happy Friday. Welcome to the next episode of the Grind Podcast. My name is Chris Clothier. I'm your host, and I'm back at it again another Friday. I hope you're having a fantastic end to your week, getting ready to have a great weekend. I know I am looking forward to just a couple of days of not having to worry 100% about business. I can concentrate a little more on family, and that's always fun, right? Hope you get to do the same, or whatever it is that you're looking to do for the weekend. Today's topic, I get to start into, again, another list topic. This is 5 real estate myths that need to get busted, that we as investors, if you're listening to this, you've got to forget this. Look, let me tell you something as well. If you are a business owner, an entrepreneur, today's podcast, if you haven't started investing in real estate, listen, this is something you need to pay attention to and take some notes on, because real estate investing is a powerful way to build for your future. It's a powerful way to build. I'm not going to say wealth, because that's such a overused word. It's just a way to build the ability, and could be a piece of building the ability towards, the dream that you have for yourself and your family, as a way to be able to set yourself up for whatever future it is that you're trying to design. All right. So this topic today pertains to everybody. If you haven't started investing in real estate, or if you're holding back, or you're, maybe you find yourself kind of, hey, I recognize these 5 myths in the way I view real estate. This is going to help you set them aside and take major steps going forward, building your portfolio, whatever it's going to be. Okay. And I'm just going to jump straight in. There's 5 of them. The 5 of them that we chose, I'm going to try and knock them out in 3 minutes each, try and keep this to about a 15, maybe 16-minute podcast, just so you know on the front end. All right, so here we go. The first one is one that it irritates me. It makes me mad. And this is a myth that's highly perpetuated by websites that I love, like biggerpockets.com, because I love that site. I think it's fantastic for investors. But there's definitely this perception on that website, on the forums especially, that there's only one way to invest if you want to call yourself a real estate investor, and that is to be active, to be slinging hammers, throwing paint on walls, fixing out, electricity, changing plumbing. If you're not actively getting your hands dirty as a real estate investor, then you're not a real estate investor. You're just, some person that dabbles. You're not a true investor. You may be something else, but you're not an investor if you don't actively invest in real estate. And I'm here to tell you, there are literally dozens upon dozens of ways you can invest in real estate, whether it's individually, through partnerships, through general partnerships, through syndications, investing in stocks, REITs, the stocks with REIT companies. You can wholesale, you can buy properties, fix them, you can sell them, you can buy properties and hold them for long term. You can buy properties from other companies like a REI Nation, where we buy it and we sell it already renovated and occupied by a resident. You can buy property like that. That's called turnkey, where you're really not doing anything. You can invest in the house next door. You can invest in a house 15 states away from you. No matter what you do, if you own real estate, if you own a piece of real estate in a REIT, if you lend money to a real estate investor, so you are investing alongside them, but you're getting a cash return and not the return of the piece of property, no matter what, you are investing in real estate. I just hate this idea that if you're not actively doing something and actively, finding the house yourself and negotiating it and doing all the fix up, then you're not a real investor. If you're not collecting rent every month, if you're hiring out a management company, then you're not a real investor. That's a bunch of crud. I do not like that at all. It really upsets me, because the reality is that if you have taken your time and your treasure and you put it into real estate, no matter what the manner, you're a real estate investor. So don't cut yourself short. You don't have to be active to be a real estate investor. A second one, that this is a myth that really we've kind of busted up with the advent of the internet, and how actively that the internet has changed the way people invest in real estate. That the myth was that you could only, or you should only, invest in real estate close to home. That if you invested in real estate far from home, you were taking too many risks. You could lose all your money. And not that wasn't true at one point. I mean, I'm sure it was, especially before you had the ability to search title online, before you had the ability to pull up pictures of properties online, before you had the ability to, do so much business like with Zoom. Like, look what's happened over the past year and a half. Suddenly now zooming is like it's a verb. I think it's something that's actually happening. You can Zoom with people at a house and see what something really looks like. So you do not have to invest close to home if you want to be a real estate investor. Again, there's so many ways you can invest far from home. And with the internet taking such an active role in developing how we invest in real estate, you could literally invest anywhere in the world, provided you're comfortable with the investment that you're making. So for me, I think that myth is crazy to think that you can only invest close to home. You do not have to buy the property next door. Like I said earlier, you can buy one 15 states away and have the same level of security as the one next door if you take the right steps and you take the steps to be secure, right? Fair enough. All right, so that's 2 down. You don't have to be active to be an investor, and you do not have to invest close to home. You can invest passively far from home, actively far from home, however you want to do it. This third one is tricky, okay? But it's something we need to look at. You need a lot of money to get started in real estate. Okay, so 2 things that are kind of weird about that whole myth. Number 1, need and a lot. The word need. Let's be clear. I'm not a big fan of these no money down, other people money methods of investing in real estate. I am much more a fan of building up our capital however we have to do it and then using that to get started. But what does a lot mean? Well, a lot to 2 different people can be 2 completely different sums of money. Okay, so what does it mean to have a lot? Well, I think I may have said this before somewhere, maybe even in this podcast, that I'm a believer that, if you're going to invest in something, you need to make sure that you still have, let's call it 2 to maybe 4 months of income left off to the side. You don't need to use every last dime that you have to get started. You don't have to, I'm not a big believer in putting yourself at major risk. Like, again, betting everything on a single house that you're going to try and do. If you're going to buy it and fix it and hope to sell it for a big profit, but you put all of your life savings into it and you've got nothing left should it go down and not work. I'm not a big fan of that, okay? So a lot of money, I don't know. I don't think you need a lot of money to get started, no, but you need to make sure that you don't rob your peace of mind. Don't take away from what you've put together to provide peace of mind and say, I'm going to bet it all in the real estate market. Once you know that you're secure, should something occur, then for me, if you want to invest in a $100,000 house, you need to have, to me, 25% of the cost of that property saved up off to the side. I don't know how you're going to buy it. There's lots of questions on how you're going to buy and what you're going to do in real estate as to how much money you're going to need. But for me, I want you to have 25% of the value of a property saved up to get started. I think that's probably the smartest thing to do. There's lots of ways that you can use creativity to get houses bought, no matter what it is, what part of the cycle you're investing in wholesale houses or buying houses for long-term buy and hold or buying houses to sell quickly. But you don't need all of the money to buy the house. You don't need the full amount of cost of the house, but you need to have peace of mind. You need to have some comfort behind you that, hey, I'm not going to lose everything if I go in. That's certainly not something that I would suggest people do, but that doesn't mean that you need, it doesn't mean that you need a lot of money. It doesn't mean that you need the full price of the house to get started, but I'm a big believer that you need to have some, and what that's going to be for each of us may be a little bit different. Hopefully I answered that one, because that's a real tricky one. People try and they try and scare investors into taking high interest loans, into taking on partnerships that they don't need, as a way of convincing them that they need more to get started. And so I'm going to give it to you at a high cost. I'm not a fan of that. So that's why we threw that one in there. So another one, I hate this idea, this 4th myth of now is the wrong time to invest or now is the right time to invest. There is no wrong or right time to invest in real estate. There's only today, the deal you have in front of you in the current market that you're facing. That's it. There's none of us, nobody, I don't care who they are, I don't care how much success somebody has had, they cannot time the market. No one's going to be able to tell you predictably today the exact time, even within a week, that you need to sell your house, or the exact time you need to be buying something because it's at the lowest or the highest of a market. It just doesn't work that way. I'm a firm believer that if we take care of the basics, if we protect ourselves, if we do proper due diligence, if we understand the investments that we're making, then we can be successful and buy good investments in any real estate market in any city. We already went over earlier the fact that you can invest in all kinds of cities. You can be an active or a passive investor and still be a real estate investor. So, there is literally not a right or a wrong time. Every time that one market is going up, there are other markets that are going down. Every time some markets are going down, there are other markets that are going up. There's not one national real estate market in the U.S. There's hundreds of separate real estate markets throughout the country. And then in those markets, there are little pockets and breakouts. Just like, and I will use the city of Memphis as an example. Memphis is on a nice run of appreciation. I'm not going to say unheard of, but normally Memphis is a nice, steady type city. We don't have big swings up or down, but there's a lot of appreciation happening in Memphis right now. But not every neighborhood of Memphis, not every street of Memphis, not every zip code. It's as always, it's going to be pocketed. And you as an investor need to understand that it could be the right time to buy in a certain market in Memphis for sure. And it could be the wrong time to buy in another market for Memphis. A market may be at its very top and you don't need to buy there. Or it could be that another part of the city is ready to take off due to some investment or being in the path of progress that is a great time to buy right now. And both of those statements can be true at the exact same time in the exact same city. So forget this whole notion that there's a right or a wrong time, like in general. It's both of those statements, it can be right and wrong depending on what part of the city you're investing in, at a certain time of year. So anyway, forget the idea that you can actually time the market right or wrong. That anybody that gives you those big blanket statements, don't listen to them. Okay, I love this. I just had to read my notes here. Number 5 was a good one, and this was brought to by our team. Gave me this idea because this is something that I think a lot of people are facing today. And I don't mean to lump a bunch of people into one. I don't mean to say like millennials, like it's just this one big group of people. So hear me out on this. Data shows that there's a certain group of people, mostly millennials, born between certain times, that haven't bought their first home yet. The myth is you need to own your own home before you can start investing, which is, again, today with as much information as we have access to on the internet, the opportunities we have to invest. The idea that we can literally live anywhere we choose to live and we can invest anywhere we choose to invest at the same time blows this myth out of the water. You do not have to own your own home to own investment properties, and you get the benefit of both. If you rent your housing and you like where you live and you rent in an area that you enjoy and you've got especially this piece, you have a landlord or a management company, whomever that is, you get along, you take care of the house, they take care of the house. It's a great relationship. Why would you think I have to change this status before I can start building wealth for my future? Start building a portfolio, start paving the path towards whatever financial freedom, whatever I define as that financial freedom, however I define wealth for myself. Why would you wait? You don't need to. The whole idea that the house you buy for yourself is the number one asset, all that stuff is gone. That is old advice. Today, if you can get started investing in real estate and you can do it easier than buying your own first property and your own happiness, you can protect your happiness and say, I get to live exactly where I want to live, but I can invest somewhere where I want to invest and do well. There's nothing holding you back. The internet has made this so simple to do today. So absolutely forget that horrible myth out there that you need to own your own house before you can start building other assets. That is crazy. If you have the ability, live where you want to live, invest where you want to invest, I don't know there's much more to add to that, right? Because this is crazy. So here's the 5 myths that we talked about today. Just as a quick little rehash for you, there's only one way to invest, and that's active. That's crazy. That is nuts. There are literally hundreds of different ways you can invest in real estate, some active, some passive, some with a lot of, come with a lot of responsibility, others that come with no responsibility, but you got to bring the money to the table. Either way, there's so many ways you can make money in real estate. Invest only close to home. Forget that one. That's nuts. You do not need to invest in the house next door. You can invest in the house anywhere in the world, as provided you've done your good due diligence and you are comfortable with the investment that you're making. You need a lot of money to get started. Hopefully I've blown that myth out of the water. Does it take money? Of course it does. And you need to be intelligent with the way you go about it. Are there ways you can invest in real estate with no money out of your pocket at all? Sure. I'm not a big believer in them. You're never going to hear me talk about them here because I don't think that's the right way to go. But for some of you that are listening today, it may be the only way. If that's it, look, do your due diligence again. Be prepared and go do what you need to do to build up your nest egg to start acquiring properties with your own money. Now is the wrong or now is the right time to invest. Incorrect. Don't listen to that myth. There is no right or wrong time. There's only now. There's only, what am I looking at? Is it the right investment for me today? Is it going to provide me what I'm looking for as an investor? And then last, you need to own your own home before investing. Again, I went on a rant on that one. You guys know how I feel about it. You don't. There's so much opportunity out there for us as investors and those that are still waiting to buy their first house. If you're in a good situation, if you're in a good scenario and you like, where you're renting and you have the opportunity to invest, get started. Don't wait. You don't have to own your own home first. Okay. I told you it'd be like 15 to 16 minutes. I'm right on it. This is 17 minutes. Thank you so much for joining me. I appreciate it. Guys, thanks for spending your Friday with me. Have a great weekend. Until we get together again on another one of these, commit to the grind, and we'll see you later. Y'all take care.